Welcome to another episode of Backtesting the ICT 2022 Mentorship. This is episode 13 for trading day Friday, January 5th, 2024. In the daily chart, we look for another move down to this final fair value gap. That's my expectation for Friday's price action. Who knows, but I think it will reach closer. But I could be wrong. And back to the micro. Okay, here we are in the micro E-mini. Jumping down to the 1 hour, skipping to 7 a.m. We continue our move down, take out Thursday's low. Here's a 1 hour fair value gap, trade up into, move down to where? Take out this low. There's the 8 a.m. candle, jumping down to 15 minutes. 8:30, 8:45, jumping down 5 minutes. We're looking for shorts. Here's a 5-minute fair value gap, trade up into, potential move downwards. Skip ahead. Moves up. Moves up. We take out this short-term high, and that's a market structure shift. We do not help to hit the sell side liquidity. Here's us marking the midnight open. Here's an overnight high. And up here is some buy side liquidity and some stop rates. Some key points. You'll see why those are marked in a short bit. Skipping ahead on the 5-minute. This is a 5-minute fair value gap. A 3-minute was formed. We move down into. But where are we reaching? If we reach for the New York Midnight Open, that's a terrible risk to reward ratio. We would never take it. If we reach higher, the initial reach would be overnight high, then potentially New York Midnight Open, then one of these other positions. I'm not looking for longs yet. I'm hesitant. This feels like I'm trying too hard, so I'm not taking this trade. I'm just not. Okay, it moves up into, it moves past the overnight, the New York Midnight, and further. Back to 5 minutes. Okay, there's a big move up. We took out some So key points of interest, there, possibly there or there, but absolutely here. Why? It's almost 4 relative equal highs. That's a big one. Since we took that out on the 5, where do we go next? Here's a 5-minute fair value gap. This is a trade I'd be comfortable taking. That's a good risk to reward ratio. This point has already been taken out, so I might reach higher for these buy stops. We enter into the trade. Rallies up. Take our profits right here. Another fair value gap forms. Right away we can measure. This is not something I'd be interested in taking. What would our target be? Previous day high. Trade down into, move up, don't hit our high, cracks down. This is bearish market structure shift. We get a 5-minute fair value gap, a move down, that's what we're looking for. Trades up into, and moves down. Another fair value gap is formed, but that takes us to lunch. So I'm calling these this is a second move taking out a low. The shift could be argued to have been made here, taking out this low, which is why I feel comfortable taking this trade, not this trade. Skipping ahead to 130. Still haven't reached into that fair value gap. There we are. At this point, you have to ask yourself, did we change back to bullish, or do we remain bearish? This is a pretty significant move down. Energetic displacement. Devil's advocate, we've had significant moves up too. Here's 4 moves up. I'd argue we need to trade back down into these. We're trading up into this. Now we trade down into this. Sideways action. Targeting this low. There we go. What's your entry? What's your stop? I'm comfortable with this stop, even though it's higher than I'm used to because of the good risk to reward ratio. Entry, here's 50% of the fair value gap itself, but dropping it between displacement high and displacement low, we get 50% here, 61.8 here. 61.8 is a better, more optimal entry. Haven't done many of those in this channel, but with the move up, this energetic move up, with the fair value gap being laid out as such, I feel more comfortable shooting for somewhere closer to halfway through the fair value gap, corresponding to a more optimal trade entry. That's why I think the 618 makes a lot of sense. We take some heat before we move down and hit our target. And that's a wrap. So I was expecting a bearish bias. My higher time frame expectations were hit early. We moved down into this daily imbalance before 8:30, and then we turned and cracked very, very high, taking out multiple key levels before returning and retracing back. So even though we wanted shorts, we did recognize this structure shift, took a trade in the bullish direction against our bias before switching back to our bearish. We had a trade right before lunch, kind of ending maybe 5-10 minutes into, if I recall. Yeah, about 5 minutes. And then another trade after lunch, right around 1:30, which is perfect. We exited right before the closing hour. Well, that's it for this one. Thanks for watching. If you would like to subscribe or like this video, I'd really appreciate it. If you have any questions, once again, put them in the comments, and we'll see you in the next one.